It's a complex area because we do have companies that do operations on both sides of the border. But as a starting point, you looked at companies that generate a lot of revenue in the United States.
Yes, as a starting point, tariffs are a very complicated story, and investors really need tools to be able to piece out how exactly these companies may or may not be impacted. So as a start, you could essentially look at revenues across these Canadian companies and where they're earning those revenues. But given how complicated the story is, companies are more than just their revenues, and they're multinational. They have operations across the world. So these companies are not only earning revenues in the United States, but may or may not also have operations there. And essentially, what we're doing at Syntax is taking that very complicated tariff story and seeing what are the products, what are the raw materials, what are the production processes, where exactly is the risk that companies may face from a potential tariff.
So let's start off with Nutrien, and we have heard they're at risk, and the CEO of this company has warned that U.S. farmers will pay the price if there are big levies put on Nutrien's fertilizers going south. About 61% of Nutrien's revenue generated in the U.S.
Yeah, agriculture is obviously a big cross-border good, and the agricultural products are essentially going to be tariffed. And what we're looking at is essentially the potash mines out in Saskatchewan. Are they going to be, primed for the tariff? Whereas a lot of their nitrogen facilities are actually located in the United States. So what we're doing is taking these very complex supply chains and breaking them down into very discrete components in a database format. And that really just allows an investor to know exactly what may or may not be at risk here.
Enbridge, I didn't know this, more than 45% of its revenue in the United States. Of course, it's done major gas utility acquisitions south of the border. So it wouldn't necessarily be a big exporter into America, but it is a huge cross-border company.
You take a look at the Enbridge map of where their pipelines, those pipelines are crisscrossing the U.S. border. The interesting thing about Enbridge is that it's within that energy tariff bucket, which essentially they have decided to slap not 25, but potentially 10%. And that's a recognition that a lot of the energy that the United States is bringing into the United States is essentially being refined by U.S. refiners and then either used here at home or shipped worldwide. So I think that's more of a recognition that energy, which I believe is also the biggest component of the trade deficit between the United States and Canada, is sort of an important piece that you have to be a little bit careful about.
And Magna International, again, they would have major plants in the United States, but 25% of their revenue in the U.S. It's interesting. Of course, they're so international, big operations in Europe. And they, too, you can see fears over the auto industry have driven that stock down.
Totally. And not only are they super integrated into the North American automotive ecosystem, but they have a separate set of tariffs on automotive products as well, semiconductors, pharmaceuticals that may be completely separate from the Canadian tariffs. And essentially what our system does, we take a lot of this geographic information, but we're also breaking it down by the specific products. What our system is great at doing is taking something complex, like the harmonized tariff system, which are the specific codes that countries are using to determine what these tariffs are, and connecting them into an entire standardized database so we can know exactly at the click of a button where all the products, the raw materials, and the production processes and where they're located.
Maybe we could have a look at Bombardier here. BBD.B is the stock symbol, and something like 63% of their revenues US generated.
The United States is the largest private jet market. And that is going to be something that you really need to look at because they may have, a lot of MRO operations within the United States. But again, as we're essentially combing through all these filings and using our automated systems to extract this data, we're able to pinpoint exactly where a lot of these production processes and MRO places are. So again, all we're doing, we're not making judgments on the tariffs. essentially giving investors exactly the information that they need from a risk standpoint, but also from an ideation standpoint. What are some of the potential plays that could happen? You know, a famous person once said, chaos can be a ladder. So this data can be used not only from the risk perspective, but also from the ideation standpoint.
And finally, yeah, it is interesting that we're learning more about the complexity of the relationship between the two companies, between the two countries. Do you have any handle on whether companies are actually changing their investment plans yet? The Bank of Canada has indicated that, yeah, they're seeing signs of that.
Yeah, we are generally just combing through the transcripts and the filings, and I think there a lot of talk around, initially in the pandemic, it was nearshoring, where we are going to bring a lot of these plants and all these operations to friendly countries. But, you know, that paradigm has changed, that now I think the investment mindset is a lot of onshoring. Apple just announced today that they're going to make a $500 billion investment and create 20,000 jobs in the United States, because I think there's clearly a shift in the landscape with respect to nearshoring versus onshoring.